Welcome back to the Daily Journal. So as promised, here's the 6 a.m. continuation model from yesterday's price action on NQ. So immediately, my eyes go to these relative lows. I'm trying to find bias here, right? We're on the high time frame. It's the 4 hour. And so I see this as relative lows. But when you check on ES, it actually swept that previous day low. So that is SMT. And since Nasdaq made the high low, the strength is on this pair. So then we see that the 2 a.m. candle had swept the low of the previous candle and had that reaction off the new week opening gap. Lastly, it then closed above the previous candle high. So we can drop down now to the 15-minute chart for structure. We've got our bias, right? We're bullish. We're expecting the next candle to trade higher. And naturally, since the previous day low has been taken out, my eyes go to the previous day high. In addition to this internal range liquidity over here. So this is the start of the 6 a.m. candle. And of course, we want to look for price to trade below that. So what do we have below the open? Well, we've got this swing low. And this swing low has traded into, or rather, this price had expanded, retraced into that fair value gap, and then closed above. Which tells me that this low could be potentially protected. It just depends. Now, I mentioned in the previous videos how this setup was almost identical to one of the other continuation models that I documented last week. May have even traded it, I can't even remember, but I think it was the 2 a.m. So I will go find that video. I'll link it in the description so you can see this. This is algorithmic. And it's the same sequence of events that played out. Anyway, I'll leave that video for you to go and analyze and look at the similarities between the two. And so for us, we are looking for price to trade below the open, right? We are bullish, so we want price to trade into discounts and form the wick. Once the wick is formed, we can trade the rest of the body. So letting price play out a bit, and you can see we almost take out that high and we drop lower. So now we got relative highs, which is a really nice target to trade back to if in fact we get confirmation on the low time frame. Because right now all I see is sell side liquidity and buy side liquidity. Neither has really been swept. So I want to see price drop into discount. And there we go. So now we look at that and we can see, okay, we've got relative lows here, but what is the correlated pair doing? You can see with ES has in fact swept these lows and traded into one of these gaps. So if you look at this is where ES is technically, Nasdaq has technically traded into. So there's some SMT. And when we look closer, you'll find, and this is the similarity with that trade from last week. It was a very similar setup. This low is protected. We have bounced at this high resistance liquidity at the 0.75. The previous review that we did was at the 0.5, which is more bullish, right? So now that we've got expansion with, you could call it, expansion, and now retrace into this, technically this sell side and this inefficiency. So imagine this, price has expanded, consolidated, and retraced into this range. And the great thing about this is that is discount. So price is technically traded into discount, whereas Nasdaq has stayed in the upper half. So it's more bullish. So now we can drop down to the low time frames. And this is, okay, there we go. So price is traded into that wick on the 15 minutes at the 0.75, had that bounce. And we've got the relative highs over here. We've also got the swing failure as well as, here, and, some inefficiencies. So I'm looking at this as a market maker model. The question is this the smart money reversal? And for me, I haven't seen a second sweep or any sweep at all. So then the question is, has the correlated pair done that? And we look at ES. ES has not. What about YM? Okay, so All right, so yeah, YM has in fact swept this low. Was it this? Yeah, YM has swept that low. So you look at this candle over here. Now, what swing high delivered that sweep? It would be this. So what you can do, this can be your change in state delivery, which price is trading back into. So if you had to have gone for a market order here, it would have been pretty scary. And you could. Although, if you had missed that, what you could also do is let price trade it, continue higher and get the continuation. Because technically this actually is the continuation since you've traded into that fair value gap. However, price hadn't yet traded into that order block. Let's have a closer look here. Yeah, it hadn't traded into neither of that. So this is actually just inducement. But nonetheless, this is where your stop loss would be. I mean, there's no need to, even if this was, if you had used this as the continuation, fair, you probably would have got stopped out there. And that's okay, it doesn't need to be perfect. I mean, this price action isn't exactly a plus. So say that you had got stopped out at that low, that's fine. Because you've now traded into, you've swept that swing low, you've gone into that order block, and you've had your change of the state of delivery there. So what you can do is just wait for it to form a fair value gap. Just trade it back into that order block. Okay, so there's the fair value gap. So now what we can do is look for price to trade back into that inefficiency, and then close back above for continuation. Because then you've got a low where price can trade into. Okay, so does it drop in? Okay, close this higher. So let's have a look at if the correlated pair. So for swing points and things like that, I'd use YM. But for this kind of price action, ES is probably better. At least that's what I've found. Okay, so it's being a little difficult today. Let's just delete it. Okay, so there is ES, and has it traded into, yeah, ever so slightly, probably down to the tick. So this candle had in fact, was it? Yeah, that candle had in fact traded into that fair value gap. So at this point, you can trade the continuation up to, and you can use that as your low. The low that dipped into that fair value gap, you can use that as a low. And there's 2R. So also looking at our standard deviation, the swing low to the swing high, right? That's what you do. You just go from the swing low, whatever the first swing high was, right? This is not the swing high that delivered this low. Yeah, so there it is, which should line up with some form of PRO. And look at that balanced price range over here. So that's where you can expect price to trade up to, if not this previous day high. So there's our relative highs that we looked at earlier. There's just over 2R. That's all you need. And with your stop over here, I wouldn't trade. If I had, for example, if we were in the trade from much lower down here and the stop loss is here, then great, you could hold for longer. But what could happen is price could trade into that relative high, trade lower, then continuation. You just don't know. So let's see how that plays out. Okay, it comes very close to the protected low, but it stays protected. And now we're going into the half an hour before the open, and yeah, price trades up. Look at that, straight to that 4 standard deviation. Incredible. So you could have held on to a run if you like. Would have paid pretty well if you had. But yeah, usually I just go for low hanging fruits, base hits. If I feel confident, I'll leave a runner using the standard deviations, but that played out really nicely. And look how that low was protected. So yeah, that's the trade for the 6 a.m. continuation. It really is not pretty, but the logic remains the same. See you guys in the next one. Cheers.